In a project finance transaction, finance documents form the legal backbone of the entire deal. They are not just formalities. They define how money flows, how risks are allocated, and how each party is protected throughout the life of the project. At a general level, finance documents include all agreements, letters, certificates, notices, and ancillary documentation required to implement, evidence, or support the financing transaction. This also covers any document that is formally designated as a finance document by the facility agent, the lenders, or other finance parties. In other words, if a document plays a role in structuring or securing the financing, it likely falls within this category. At the core of these documents, you will find the facility agreements. These are the main contracts through which lenders provide funding to the project. The most common is the Senior Debt Facility Agreement, which governs the primary loan provided by banks or financial institutions. In some transactions, there may also be a bond subscription agreement, especially when the financing is raised through capital markets. In addition, subordinated shareholder loans are often included, allowing sponsors to inject capital in a form that ranks below senior debt. Finally, any additional facilities agreement that is agreed between the borrower and the finance parties will also be part of this category. Another key component is hedging documentation. Because project finance transactions are long-term, they are exposed to risks such as interest rate fluctuations. To mitigate these risks, projects often enter into hedging agreements, typically based on ISDA standards. These agreements define how interest rate swaps or other hedging instruments will operate. Alongside them, you may find hedging letters or any other documentation agreed between the borrower and the hedge providers. Security documents are equally critical. They provide the lenders with protection in case the project underperforms or defaults. These documents include guarantees and security interests over the project's assets, such as shares, bank accounts, contracts, or physical infrastructure. You will also encounter transaction security documents, a security agent agreement, which appoints a party to act on behalf of all lenders, and account bank agreements that govern the operation of project accounts. In some cases, additional credit support documents may also be required. Intercreditor and governance agreements play a central role in coordinating the different stakeholders. The intercreditor agreement sets out the ranking of debts, the order of payments, and the rights of each creditor group. It often follows standard market principles, such as those developed by the Loan Market Association. These agreements also define the limited obligations of sponsors and shareholders, typically restricted to subordination undertakings and confirmations of corporate capacity. In addition, there may be intercompany loan agreements within the sponsor group, as well as direct agreements with key project counterparties, such as off-takers, suppliers, EPC contractors, or operation and maintenance providers. Fee and ancillary letters complete the documentation package. These include fee letters, which detail the remuneration of lenders and advisors, and syndication letters, which govern how the debt is distributed among multiple lenders. You will also find drawdown notices, also known as utilization requests, which are used by the borrower to access the funds. Any other document designated by the relevant parties can also be included in this category. Finally, equity support and subordination agreements ensure alignment between lenders and sponsors. These documents confirm that shareholder loans are subordinated to senior debt and set out key intercreditor principles. They may also include accession agreements, allowing new investors to join the project while adhering to the same framework. Together, all these documents create a comprehensive legal structure. Understanding them is essential for anyone involved in project finance, as they define not only how a deal is executed, but also how it will perform over time. If you found this summary useful, don't forget to like, subscribe, share this video with your colleagues and friends, and check the description below the video for useful information. Thanks for watching. and see you in the next episode.